Hello and welcome to the Stable Reports podcast. Stable Report is a news site dedicated to curating the best resources related to stablecoin projects. We celebrate the development of stablecoins and see them as a stepping stone to mainstream adoption of cryptocurrencies for daily use in transactions. If you'd like to get acquainted with what stablecoins are, visit our website or follow us on Twitter at Stable Report. And let us know what you think. As always, if you see we're missing something, please let us know. Without further ado, I am glad to introduce Kain Warwick, founder of Havven, a fee-based crypto-collateralized stablecoin built on Ethereum that recently completed their ICO hard cap of 30 million in less than 90 minutes, making it the largest Australian cryptocurrency project. Kain, thank you so much for joining us today.
Absolutely, my pleasure. Thanks for having me.
So I have to start with this question. What got you into crypto and what inspired you to create a stablecoin?
I've been following crypto for a long time, including in the early days when Bitcoin was mentioned on Slashdot, the forum, the internet forum that was going for a long time since like the late 90s. And then I got sort of deeper into crypto in 2014 and 2015 when I started Blueshift. And Blueshift is an over-the-counter payment gateway. So we process probably $5 or $10 million worth of cryptocurrency transactions a month for a bunch of the large exchanges in Australia and some of the international exchanges as well. So that kind of got me really deeply into crypto and understanding some of the friction around getting money into and out of the ecosystem. And in late 2016, as the market was starting to kind of get excited and more opportunities were popping up, I just realized there was still a gap in the market. Maker was probably the only ones that were pursuing a decentralized stablecoin. Obviously, Tether was starting to get a lot of prominence, but I had a view that there were some issues with the model, obviously. And so, I saw the opportunity and jumped in.
That's a really great experience. So you have experience with digital payment, and also your CTO, Justin, serves as the Director of Engineering at MongoDB, is that right?
But he's, as of another couple of months, he's going to be transitioning out. So at the moment, he's just sort of wrapping some stuff up at Mongo, and we're going to set up an office in Brooklyn, which he and Jordan, our VP of partnerships, will be running. So it's pretty exciting.
That's great. That's great to hear. Let's talk about Havven's dual token system. You have the
Sure.
Havven token and the Nomin token, which initially were backed by Ether, but since mid-June are already backed by Havven. Could you explain the difference and utility of each token?
Of course. So the Havven token is the collateral token. It's sort of a participatory right to essentially stake collateral and issue the stablecoin into the network. So what you're doing is, as a Havven collateral token holder, you're essentially providing confidence to people transacting within the network. And the people who are transacting in the network transact not in the Havven token, but in the NUSD token, which tracks the US dollar. And so what the Havven holders are doing is essentially providing a service to people who are participating in the network, and the people who are transacting in NUSD pay fees. And those fees are paid to the Havven holders. So the idea is that a small fee is taken from every transaction, sent into a pool, and the Havven holders who've issued and stabilized the network can collect those fees.
Where did you get this idea from originally?
It's a good question. I was actually sitting in my house on a Saturday afternoon reading about crypto as you do. And I'd had a number of different approaches that I'd been trying to take. And I had this idea in my head of like a distributed collateral pool in bank accounts, right? Trying to like work out a game theoretic way of getting people to put money up in their personal bank accounts, but without having the risk that they would run away with the money. And I kept thinking through all these different ways, different approaches. And then I was just sitting there and it just kind of popped in my head. Actually, what you really need is a crypto collateral. And what no one had really proposed at that time was charging fees. And so I had this idea that if you could charge fees for people transacting in the network, that you could actually use those fees as the collateral pool. and that would create this dual token system. So it was kind of one of those light bulb moments where I was just sitting around and reading it just popped into my head. So lucky thought, I guess.
Yeah, stroke of insight.
Yeah, exactly.
So for Havven to succeed as a decentralized payment network, you have this distributed collateral pool where Havven token holders are incentivized to buy and lock them in a smart contract with the expectation to get transaction fees in return. Is that correct?
That's correct. Yeah, exactly.
Currently, you have a dashboard on your website for people to look at all of the available data, which is amazing for transparency. But I noticed that only $17 have been generated from fees. Is that because it's still in experimental mode?
Yeah, so that was actually the dashboard for EUSD,
Okay.
which was our test transaction system. So about 2.5 weeks ago, we launched NUSD, which is the sort of full system. So we never actually put EUSD onto exchanges because it was only going to be operational for a few months. But we're expecting later this week that NUSD will be listed on 2 major exchanges. And that will then allow people to essentially access it and transact in it.
Right. Cool. So
yeah.
So obviously, if you the more Havven tokens that one locks up in a smart contract, the higher the fees. Is there a
correct?
How would you explain in layman terms what is the commission, the fees that are charged, and what sort of is the commission that you get per each dollar in a way, in basis points?
Yeah, it's somewhat hard to determine because it is going to depend on the transaction volume. But the way that we usually think about it is if you issue NUSD into the network and you maintain the right collateralization ratio, the fees that are charged are about 15 basis points. So it's a small fee compared to like a Visa, or MasterCard, or PayPal, American Express, etc. But the idea is that the collateral that you've locked up can support a lot of transaction volume. So we expect the transaction volume, like with Tether, like with a lot of cryptocurrencies, to be fairly high velocity, which means that even though you might only lock up, $4,000 or $5,000, you could see that turnover. The velocity might, be 1 or 2 turns per day potentially, especially with trading, because crypto trading tends to be pretty high velocity. So the initial view, I suppose, is that in the early days, because a lot of the utility will come from transacting within exchanges, decentralized exchanges, moving money between exchanges, that the velocity will be much higher than a standard payment network. And so we expect the fee, the sort of reward, the fee reward, to be quite a bit higher. But the more interesting thing, I think, is that because this is a market-driven system, it will be somewhat dependent on what people believe the ratio should be. So if, for example, you've locked up $100 and you're getting, say, $1 or $2 of fees per day, then, that's a 1 or 2% fee reward per day, right? So, that's a very high return. Ideally, what that should do is mean that more people want to participate, and they should therefore want to buy Havven tokens so that they can participate in the network, which should drive the price up. And so the expectation is that whatever the fee yield is, whatever the fee reward is, that there'll be some equilibrium that will be reached within the network, but that will be completely market-driven.
Fascinating. How's your board of advisors? Do you have various professors from which fields are you trying to get advisors to work on this model?
Yeah, so our advisory board actually was quite interesting. Initially, we had quite a few people from the sort of Australian business community across various areas: banking, foreign exchange, lending, etc. And then obviously as we, gained more prominence in the crypto community, we were able to attract more cryptocurrency and crypto advisors. So we've kind of built up a pretty diverse board over the last 6 to 12 months, which is good because, as we get more exposure into, I suppose, the real world, those traditional advisors, those traditional advisors, in the Australian sort of business community become very valuable for us.
Fascinating. So why are nomins initially only issued by the Havven Foundation?
The reason why is because we have a number of mechanisms that haven't yet been enabled. in order for us to stabilize the network. And so we want to ensure that we've had a chance for only the foundation to be putting collateral at risk before we open up issuance to everyone. But we're starting a whitelisting process, and we're going to be opening that up hopefully in the next few weeks.
So when you say whitelisting, it's not that every Havven token holder can mint. There needs to be a process.
Yeah, correct. Yeah, so there will be open issuance for anyone to whitelist, which will happen probably in the next 2 or 3 months. But in the short term, it will be a whitelisting process. So some of the market makers and various other people that are testing the network will be opened up.
Right. To prevent wild volatility, an automatic 80% escrow of Havven buffer is built into the system to avoid a scenario where a Havven is rapidly sold off. But hypothetically speaking, does the possibility of someone doing this keep you up at night, Kain?
I mean, it's crypto, right? So you know, it is quite volatile. I think the idea is that it would need to be a very rapid drop in price for all of the stability mechanisms that we built in to fail to respond. So the idea is that even if it's a sharp drop in price over the course of a day, there's a number of different mechanisms that are built in to ensure that the Havven holders are essentially rewarded for stabilizing the network. But I mean, at a fundamental level, we have an expectation that because you have fees that are being generated, and you can look at what the value of those fees will be, there should be a sort of intrinsic price floor that the price won't fall below. And so between that and a few other things, we have an expectation that the network will be able to recalibrate even if the price of Havens drops significantly, and that Havven holders will reduce the circulating currency to ensure that the collateralization ratio doesn't drop below that 80% ratio.
Which is kind of like your advantage over MakerDAO, right? MakerDAO is much more.
Yeah, I guess the challenge that Maker has is that because there's no correlation between DAI stability and the price of ETH, if ETH drops, nothing that they do will sort of change that, right? It'll just drop. Whereas we have mechanisms that are built in so that if the price of Havven starts to drop, we can actually pull back the number of NUSD that have been issued. They obviously can do similar things, but the fact that there's a feedback loop between NUSD and Havens should allow that to, I guess, be more responsive. Ideally, that's the intent, at least.
Right. What are your main target markets? Can you talk about some partnerships in the pipeline?
Yeah, I mean, what we're building is essentially programmable money, right? It's a universal payment network. So essentially, any use case which requires payments is going to be supported. But some of the people that we're working with that we're really excited about, one example that we just partnered with is Groundhog, and they're a recurring payments platform, which I actually think is a really strong use case for crypto because with recurring payments, a lot of those payments tend to be international payments. And people who are paying via credit card for services overseas will end up paying quite high transaction fees, for the conversion between, say, USD and Australian dollars, for example. And it's kind of one of those invisible charges that you just don't really notice, but it is there. And so I think a crypto SaaS payment platform that allows people to have recurring payments in crypto, particularly one that's supported by a stablecoin, could reduce those fees significantly. And businesses and the merchants that are processing those transactions are quite price sensitive. So I think it's a market that will be somewhat easier than, say, end consumers, which it requires behavioral change, and that can be quite challenging.
Are you also exploring remittance payments for the developing nations?
We are. I mean, it's definitely a use case, and obviously Blue Shift being a network that has over-the-counter cash transactions, on-ramps and off-ramps, that's something that we sort of see as a pretty strong use case. But I think it's something that's going to take a bit of time for it to develop. There's very strong network effects need to be in place there.
Right. I wanted to ask if you're developing banking relationships so that there could be an on-off banking with Nomins.
Yeah, I think again that's something that's kind of on the outer edges of the use case. The sort of more immediate use cases are going to be more crypto specific, supporting crypto platforms, etc. Banking relationships, even in places like Australia, have been somewhat fraught between crypto businesses and traditional banks. So I think it is going to take time for banks to identify this as an opportunity and to start to actually build those relationships. But that's pretty far out on our roadmap, to be honest.
Havven is already accepted in 9 exchanges, last I checked. How has been the process of being listed, and when can we expect to buy nomins directly from exchanges as well?
Yeah, I mean, the process has been quite good. I think as a stablecoin project, we're very interesting to exchanges, and they tend to be pretty open. They understand the tech, they understand what we're trying to do, and we find that most exchanges are fairly thoughtful about the comparison between us and DAI and Tether and various other solutions. So I think that's actually an advantage we have as a project, working with exchanges, being a tool that exchanges are interested in using. In terms of NUSD, as I said, kind of at the beginning of the call, we've got 2 major exchanges that we're expecting to go live with, hopefully in the next few days. Maybe even by the end of the week, ideally. So that's obviously very exciting because that will just open up NUSD to being a lot more accessible for people.
Absolutely. When do you expect to have additional pegs, additional nomin? So nomin USD, you already have. You're expected to have nomin Euro, nomin Australian dollar. When can we expect to have all of these other pegs?
It's something that still requires a little bit of research. So it's something we're still working on the solution for. We have a number of different ideas about how we're going to approach that problem. But my expectation is that we will probably start to test it towards the end of the year. Depending on how that research and development goes, we might have a fully functioning, different flavor of Nomen by the end of the year. But it's most likely that we'll be just starting to test that technology towards the end of the year and starting to release other flavors.
Kain, one last question. If you look at the current state of stablecoins, there's around 30 projects at the moment, out of which most of them are centralized collateral. And crypto collateral, there's around 5 projects, including Havven and MakerDAO. Where do you see the stablecoin space going over the coming year?
I think it's somewhat similar to centralized versus decentralized exchanges. I think everyone, including the centralized exchanges, understand that even Binance is obviously testing out DEXs. You've got Coinbase talking about DEXs. So I think even the centralized exchanges understand that centralization is something that we should be moving away from. But there's also pragmatism, right? We need working solutions as well. So if we all tried to trade on DEXs right now, it just wouldn't even be possible. So I think the centralized fiat or gold-backed or whatever solutions are pragmatic. The challenge I think that I see for all of those projects is that most of them seem to believe that the problem with Tether is an issue of transparency. And if they're able to just be more transparent than Tether, that they'll be able to take on Tether. And I think that that's actually kind of missing the point of what Tether has done. So I think like the DEXs that are trying to take on the centralized exchanges, the decentralized stablecoins are where we need to go. It's just a question of how fast we can sort of get up to that level of scalability. I mean, Tether just crossed 3 billion in circulating currency. Maker just crossed 50. We've got about 1 million. So there's a long way to go for us to reel in Tether. But I think time is on our side. Eventually the decentralized stablecoins will catch up, and there's no question it's a better technology. So once we get to that point, then that will be the ultimate sort of solution that I think people will be willing to use. And then obviously behind that, you've then got algorithmic solutions, which maybe even further away, but could ultimately be an even more efficient technology, assuming that some of the challenges that they're facing can be solved.
Is your team also decentralized? How is your team distributed?
At the moment, everyone's in Sydney except for Justin. And Justin is, as I mentioned, getting close to being able to transition full-time onto the project. And so we're going to have a Brooklyn office set up probably over the next 6 weeks. And so that means we'll have a Sydney office and a Brooklyn office. We might also have a community manager in Singapore because we've got some pretty strong connections there. So, we'll end up probably with 3 or 4 different people, in different cities around the world. But, the 2 main offices will be Brooklyn and Sydney.
Awesome. Any other news or milestones from Havven that you'd like to inform our listeners that we may have missed?
Well, I've hinted at it a couple of times, but look out over the next few days for NUSD to be listed on a couple of exchanges. That's what we're all sort of excited for and waiting for. So just keep checking Twitter. You'll see it soon.
Great. Kain, this was a fascinating conversation. Thank you very much for your time and wishing you success in this project.
Thank you so much.
And remember, if you're interested in learning more about Havven, check out their website at Havven, that's Havven with 2 V's, .io, or follow them on Twitter at Havven_IO.
Awesome. Thank you so much for your time.
Awesome.
Thanks for having me.
Bye.
See ya.